Now today I got a very interesting stock that I want to start to talk about on this channel, and that would be Block Incorporated, ticker symbol SQ. Now if you haven't heard about this stock, you might have heard about their actual products if you've been anywhere on the App Store, as really they are some of the most important apps that we actually have today for young individuals trying to get into finance. On one half you have Square, which is a payment processor and e-commerce platform that deals with both online and in-person payments that does everything that a business could possibly need. And then on the other side of that, you have the absolute giant of Cash App, hitting the top of the virality charts of any sort of banking finance that you could possibly want to achieve if you are a digital financial company. Cash App has done it. Today I want to talk about the mixed results that they recently put out, but an amazing statement from the CEO that still made the stock climb even though they missed on a lot of their targets. So just jumping straight into the numbers, at the top here we have gross processing volume, okay? This is all the money that actually passes through Square and Cash App combined, and then this is the growth rates that we actually see for gross processing volume. Next, we have all of Square's ecosystem, which is, the online seller that I was talking about, then Cash App, which is the actual, banking platform, and then Afterpay right here is pretty interesting. This is their, M&A of a very large buy now, pay later company, actually the second largest in the world, so we can take a look at that. However, that was just happened this year, Q1 of 2022, and then at the bottom here is their other, okay? This actually involves their TBD company, which is a Bitcoin company, and then as well as Tidal, which is a music labeling company. So both of these are very interesting, but this is extremely, much smaller of an actual business model than they have versus, Square and Cash App, and we can start looking at those numbers together. Now, I also want to talk to you guys about my format for this spreadsheet, okay? We have Q4 of 2020. That was 2 years ago, then 1 year ago, last quarter, and then this is the quarter that they've recently just, actually published on. And then in reverse order, we have it the same way. This is the quarter-over-quarter growth rates, year-over-year, 2-year CAGRs, and then I also have brought in 3 years because I also have the 2019, numbers as well. However, you're going to have to be a member to see that information, as long with, every other spreadsheet that I've made on this channel in total. If you guys want to join and support the channel, make sure you guys check that out down below. It's just right beside that subscribe button. If you haven't pressed that too, might be a good time to do that as well. Okay, so back to the numbers. First, starting with gross processing volume, which we can see stands out dramatically, okay? Because quarter over quarter is actually a negative number. We haven't seen that in Block's history so far. Even whenever looking at the 2-year compounded annual growth rates, it's actually usually holding up much higher than this at 33%. Remember that that's a compounding number. It's not 33% over 2 years. That's actually 33% on average each year. So a negative 2% is a little bit of an outlier, but like I said, these are mixed numbers whenever we actually look at this company. There is a lot of good things to come as well. Square is a good company, but not necessarily growing as of this quarter. As you can see, quarter over quarter, once again, in total, we're seeing the Square gross profit go down by 5%. This is obviously because hardware revenue down quarter over quarter by almost 18%, transaction volume down 3%, cost of revenue also dropping a little bit, so that is good, but whenever we're actually seeing year-over-year growths of only, almost 2%, it is nothing like what we're seeing at Cash App's ecosystem, where year-over-year in the gross profit area is up 38%. Subscription and revenue services, which means that people are obviously signing up for much more products at Square, is still growing phenomenally, meaning that we might not be getting as many new customers as maybe we were expecting, but the people that we do have are growing internally, quite strong. So this could be why, hardware revenue is not growing a ton, because this really focuses on new members, whereas the subscription and services is the customers that we already have. So we're building stronger relationships with people, but maybe the sales and marketing teams haven't been as successful, and that's leading the overall, gross profit to actually shrink. Whenever looking at Block's two companies of Square and Cash App, Square has always been the bigger brother of Cash App because, well, it's been the one that they've started ever since the company has actually been founded. Cash App's actually kind of a new addition to the company, starting at around 2018. But the growth at Cash App is unbelievable. Like you can see here with the year-over-year growth, this is actually the first time in Block's history where Cash App is actually bringing in more gross profit than what Square did this quarter, which is, marks a big, sign for the company that this is actually the product that you want to start looking at. This is the big name, is the Cash App ecosystem. The subscription and services for Cash App really has to do with their Cash Card, which makes up almost 26% of the overall gross profit at Cash App, and their actual card revenue and the amount of people that are using this platform is unbelievable. unbelievable. Look at the 2-year compounded annual growth rates of 80%. I mean, unbelievable. Or even year over year, 85%. Just absolutely incredible. I know there's a lot of big fans of SoFi on this channel, but no, I'll answer your question now. We do not supply the cash card for Cash App. And then Afterpay gross profit, just to go back to here, the growth is actually at 76% quarter over quarter. I was getting scared there for a second. Let me just actually bring up Q1 and Q2 of 2022, where the growth between Q2 and Q3 was almost non-existent. It looks like the exact same number, no growth at all. So I got quite scared, but then in this quarter, obviously they were able to bring it back. And then going over and looking at Tidal and TBD, okay, the growth is good and I'm happy for it, but it's also just such a small portion of the business that really it's almost not worth looking at, but it is still growing and, that's exciting to see. We're not really playing with big numbers there. Whenever we look at, 700 plus gross profits on each of our companies, Afterpay is also bringing in a good amount, and then we're talking about almost 11. But none of this quite explains why the stock did so well after the earnings call. Jack Dorsey actually stated that they're not happy with the growth that they're seeing today, and that the 35% gross profit year over year is just not where they actually want to be, and they still want to, going forward, even though they're much larger, to reach a 40% growth rates going forward. He also said that they really wanted to tighten their belt on expenses and include the actual addition of stock-based compensation whenever looking at the full financial picture of Block Incorporated. They said that in 2022, their headcount grew by almost 44%, but in 2023, that headcount would only grow by 10%, while still trying to keep up a higher growth rate than what we're already seeing. They want to ensure that customer growth retention in both Cash App and Square both remain over 100%, meaning that they keep the customers that they already have and then potentially even upsell or cross-sell them into other features. They're also expecting that their sales and marketing budget, instead of spending 25% of their overall revenue, will probably only go down to 5 to 10% this year. Like Jack Dorsey said, they want to raise the bar for their efficiency and their growth rates, make a much stronger company overall, and that's exactly what shareholders wanted to hear. All in all, I'm excited to see what Jack Dorsey makes next. Obviously, he's an amazing developer and innovator. It's just a matter of him actually tightening the belt, which I'm so happy that he said he's going to come out and do. If you guys like this sort of content, I'd appreciate a like, but aside from that, that's all from me today. Bye for now.